Hello everybody and welcome to my regular look at the WTI crude oil price. It's 12th of September, 11:30 a.m. here in the UK. It's been a quiet start to the trading day so far. I think most markets are waiting on those Wednesday CPI inflation numbers out of the States to maybe give a bit of a clue to where interest rates could be heading next. Now, on the fundamental side of crude oil, it's looking a bit more bullish. We've had some good data out from China, one of the leading demand players in the market. They came out on Monday looking much more encouraging there, so propping up the numbers. Another thing propping up the numbers are the potential OPEC plus cuts in production. Now, we've seen Brent over $90 for the first time in a while. What else is there? I suppose the other takeaway, EIA and OPEC plus monthly reports also out this week. But the general feel behind oil at the moment, I'd say slightly more bullish than what it has been for a while. Are the charts telling us the same story? Well, let's take a look. And there we go into the charts. Well, let's go into some actual further fundamentals first. The Baker Hughes rig count, great proxy for the energy sector as a whole. I like the US line up there. Change from prior count +1, change from last year -127. So no significant changes, but first time in a few weeks that we've seen a positive number from the prior count there. And inventories as well. Well, we had a few, I suppose, outlying shocks there, better than expected numbers against last week's forecast. For example, 2.06 million barrels. We saw 6.307 million barrels. I think that's added to a bit of the bullishness to the market as well. And the well, let's just have a quick look at the current state of what's been going on this morning before we dive into some other sentiment-based indicators. It's been quite a good start, actually. There you go. Up, hovering around those highs, $88. You can see yesterday as well. Didn't really want to get through there. Just pulling off a little bit around that pivot point there. Said $88, but not too bad start there for WTI. Today and into, let's go to the commitment of traders data and seasonality. First, seasonality down the bottom. What have we got? It's mildly bullish through to sort of mid-October, bit flat. Then we have that dip, and then it's all the way up into spring of next year. So we'll call that week bullish. And what have we got for commitment of traders data? Like I keep saying, like to see the large commercials do the inverse to the price and the large speculators following it. And that's what we're seeing at the moment. You can see that direction there, down for large commercials, up for large speculators, and the price moving up as well. So that's encouraging too. And we've also put our head above that previous range that had been in play since late 22, about $83 was the top side there. Now $5 above that. Volatility. This is a daily chart. OVX is the volatility index for WTI, and you can see there as well coming off. To me, that encourages the bulls. Get into that trend a bit more, and we've got some. I call this my forex. Sort of guide to the strength of the current WTI as well, because all the basket of currencies that go into this indicator are oil related. Look for that direction, and it has actually started to pick up as well. So another bullish sign, gone into the cloud, so could call it neutral. But we've seen over September last week a bit of bullishness picking up in there as well. Let's go back now to the longer term price play out at the moment, see if there's anything going on there. Down the bottom, indicator bullish. You can see the 2 standard deviation regression bands I've drawn on. You can see that topping out, going outside that around sort of February 22 to June 22, and then pulling back in, coming right the way down to the bottom again, and then pulling back more towards the mean, which at the moment is around $97. So looking at that, it can still be some significant upside there, around to that Fibonacci high, $131, $132, or to the downside, it fails. It's got to get through this 61.8% Fibonacci line, $82.50. Then it's down towards this support at $67. Volume at price, a whole load of it, the point of control down at $52. So if there's a serious pullback in the price, then I suggest that's probably the place it will stop first. It's also on a 38% Fibonacci line. But at the moment, as I say, looking bullish, we got the mean around $97, $98. So first objective for the longer term bulls, and then up through to those highs. So let's have a look at a line break chart for some shorter term price action. This is a 1 hour chart. I use the 4-2 setup rather than 4-4. What do I mean by that? 4 bars and then 2 bar entry. So if I draw that on, we've got 2 blocks up here. I'll be looking maybe to go short. If I was bearish, around about $87.85. A bit more conservative for the 4-4 approach. Maybe more around the early 87s. But at the moment, it's a bearish setup there for those who are potential bears of the WTI. And then into the Renko charts. Medium term, what do we got? Well, we've got most of 23 here on the chart, $1 block size. And you can see that nice little up run that we've been witnessing, hitting the Fibonacci at 88. Some volume starting to build up there as well at that price level, which is nice to see. Got that bit of arc in there as well, but a huge amount of volume between that lot, which is that range that we've been talking about so much. And a price pullback here, support sort of area, $79. A lot of action in there. Then look at these Fibonacci's for the next potential zones, $73, $74. You can see there that 38.2 line, a lot of price action in that range as well. And then slips down, point of control at the moment, $72, just under. And that next Fibonacci line around just under that. And then we've got like a further arc in the price, which could take it down to 65. That's a downside to it, but if this bullish run still plays out, then we've got $94 to the upside and then 97.5. So they would be our next 2 targets. And then if we zoom in a bit to the shorter term price action, we can see, I suppose the first takeaway from what I see is this, it's just not getting past the $88 at the moment. Volume's building. So a lot of pressure there on the price. Maybe something fundamental coming out of the woodwork will shift it up to nearly $94, $97. But the moment keeps banging its head, a pullback. We'll see $83.5 to $83.75. We've got that arc in the volume at that price, which would take it down to the point of control Fibonacci line, which is 82, call it $81.5 there. And a break below that, we've got that lot of action there around 77, 78. Probably that Fibonacci line through that other volume arc around about $75. So there's some shorter term numbers there for you to have a think about. But basically, though, we've got to say it's looking a bit more bullish. Worst case week bullish. Watch out for those fundamentals. Wednesday for the CPI numbers might shift things around a bit. The EIA, OPEC Plus reports. OPEC Plus propping up with likely production cuts. China data looking not so bad as it has been in the past. So the signs fundamentally, technically looking, like I said, a bit more positive to the upside for WTI. So that's my WTI. I believe at 1 o'clock UK time, which is at 8 o'clock Eastern time, I'm back again for a quick look at Nat Gas, see what what that's up to and where that could be heading next. And also check out the YouTube channel at TheStopHunter for further live streams, new content. Hit the subscribe and bell buttons to receive further notification of new content. So with that, thank you for joining me for today's WTI price analysis. Good luck with trading, and I hope to see you soon.